Hello. Good morning, everyone. I hope you are enjoying the upbeat music that I start my day with every time with you. Hello, Pedro. Hello, Michael.
Good morning.
Hi, Marie. Hi, Pedro.
How you doing?
All right, let's get this show started. All right, guys, to all our viewers and our listeners, welcome back to the Coffee Time with Marie Torossian, CPA. Of course, if you are a returning listener or viewer, make sure to give us we are always welcome you. But if you're a new listener or viewer, give us a thumbs up or a hands up in the chat so we know you are new. For those of you, if you are listening, so obviously you will not be able to do that, but that's okay. You can always like and share the show or the video, and we've been going live every week Thursday 10 a.m. Eastern time on Facebook, LinkedIn, and YouTube, and we keep running this show over and over, so you can always catch it again when we rerun the show. I am your host, Marie Torossian. I'm a 10X certified coach, CFO, auditor, certified public accountant, and a chartered global management accountant. As always, and I'm going to keep the other intro short, so as always, I'm joined by my friend and tax colleague, Pedro Gonzalez, CPA. Good morning, Pedro.
Good morning, Marie. Good morning, Michael. Good morning, everybody else that is joining us. And Pedro Gonzalez, your business and tax strategist, helping our clients with cash flow. I always say cash flow is the lifeblood of any business, regardless of size or an industry. Tax minimization strategies, taxation erodes wealth, and exit strategies. We're all going to exit. It's just going to depend how. I leave it at that. And
Awesome. And then, guys, today we have another special guest, also my colleague and friend of mine, Michael Reeder, CPA, managing shareholder at Schwartz & Reeder Advisors. He helps business buyers with accounting, tax, funding, and financial aspects of their acquisition by simplifying the complex matters for them. He's joining us from, are you in Chicago or somewhere else, Michael?
So I'm coming to you this morning live from Portland, Maine.
All right. Awesome. Well, welcome to the show, Michael.
Thank you. As long as there's internet, then
We're good.
Yep.
Great to be here, Marie. Pleasure to meet you, Pedro.
It's a pleasure, Michael.
To the entire audience, happy Thursday.
Awesome. So obviously we have a very special, discussion today. We're trying to do it, a little roundtable here, but just, usually, Michael, we do a quick summary of what we've talked about in the past. We've been around now. This is our 55th episode. It's quite a big commitment for me and Pedro being on there every single Thursday doing this. So we've talked about, E2 investor visa requirements and how a business plan plays a very big role in that. We've talked about IRS audits and financial audits and what's the difference between them. We've talked about inventory management. We've talked about ethical standards in accounting and tax and all that. Partnership agreements, real estate, taxation, and a lot of different things. Specifically, recently I worked on serious messy books and what that means and how costly that could be for business owners. We've talked about franchise and licensing agreements and what is the difference, how is it taxed, and then we have also covered, other things like questions that come from our clients or prospects. So guys, those of you who are listening, viewing, please go back, check out some of these episodes that we've covered in the past, so you can kind of learn to answer, see those questions and find your answers, and learn from these videos that we're making for you guys. This is for you. This is for your education. And in that, so today's intention is to do a roundtable discussion amongst the CPA colleagues, about the Inflation Reduction, or what I call it, the Inflation Relief Act of 2022. Our viewers and listeners know that we have mentioned a few things about this, but I wanted this to be more of an open discussion, and if you have any personal thoughts, feel free to put in there. So Michael, you are our guest. What is your overall thought about this Inflation Reduction Act?
I mean, for me, the provision in there that says that allows for 87,000 new IRS agents that are going to get added to the IRS over the next decade. That's the biggest thing that stands out to me. That's the most alarming thing. And it's always important. It's always important to do strategic tax planning with your CPA. For all you people out there, all you business owners, even if you don't own a business, strategic tax planning for everyone, always important, always important. But it just got that much more important with the passing of the Inflation Reduction Act, with this provision in there about how, so the IRS right now only has about 70,000 agents on their payroll. And now they're going to add, so the IRS is going to more than double over the next decade. I think that's very alarming and very concerning. Audit enforcement is going up, and we've been in this grace period for audits really since Trump. What Trump did was he defunded the IRS with budget cuts when he came into the office, and then an already defunded IRS got slammed with COVID and everything that came with COVID, right? Like having to deal with stimulus payments and having to coordinate with the SBA for the EIDL loans and the PPP loans, and having to process all of the amended 941 reports, the payroll tax reports for the employee retention tax credit. And so, and I'm sure that you all out there, if you've had to try to call the IRS over the last few years, it's probably like for an hour or 2 hours, and all of a sudden they just hang up on you. And so, but with all that being said, audits have been at an all-time low, and so that's about to change. And so, gotta be prepared, gotta be strategic, gotta be prepared. God forbid you were to get audited, to make sure that you survive it. It sucks to be audited no matter what if you pass it, because once you get selected for audit, they're going to do everything they can to poke their head into everything and to try to find this, try to find that, to justify making a return on the investment for the audit, because the IRS has to pay that auditor. That auditor has a salary, and so. But to me, as a CPA, not getting caught up in the semantics, because we all know how politicians are. Like the Inflation Reduction Act. Again, I'm not a politician. I'm a CPA, and I look at that provision in there, and it's very alarming. So we'll see what happens with it. But the IRS is getting way too big for my liking.
Yeah, I feel you. I was going to say, would you consider that maybe portion, and then again, I'm just playing on both sides here. Would you consider, and then this is a question for either one of you, would you consider that maybe, since you mentioned, let's say during Trump administration, he kind of defunded it to a certain point, so there were maybe less hires. So do you think they are just bringing it up to the same point they were before, or this is becoming like a massive growth to a point where it's going to be way beyond what usually the IRS agent base has been?
That's a good question. I don't know what. That's a good point, Marie. I don't know what it was before Trump slashed their budget when he came in, but I just, yeah,
Just
I
the
mean,
overall, yeah.
Democrats collect like what they do. Like one of the things that they do is they increase revenue, right, by increasing taxes and increasing enforcement to
Right.
go and to collect more taxes. So I just think it's in their dogma. So I mean, and I hope I'm wrong, but I personally think that they're just growing out of control. But like I said, I hope I'm wrong.
Yeah. Edward, what are your thoughts there? You think,
Well,
you're
uh,
you've been around, in that tax area. I mean, I've been a little bit kind of, out of, the whole realm of, tax
yeah.
side of the CPA world. So do you know, let's say roughly what was the agent base, let's say prior to any changes, and then if you think
Well,
they're coming,
yeah. The thing is that the 87,000. One, I don't know if they have the ability to hire that many people. We have a shortage of
do we have that many?
employees. Yeah, no, and it's a fact. I mean, it is an issue even for the large CPA firms to hire recruits. There's a shortage of accountants. So if
Right.
somebody, your children should be going into accounting because there is a shortage right now.
We need them.
Yes. So, but again, irrespective if they're going to hire 87 or not, 87,000 or not, there is debate on both sides as far as the number of, because also the IRS has an aging population, meaning that a lot of them are approaching retirement. So they're expecting that some of these people, now that the funding is coming, that some of that money is going to go into paying out certain employees to out of their payroll. But irrespective, again, regardless of political views and all of that, is that we will expect an increase of enforcement, and that is the when we look into the funding, it is going towards enforcement practices. So we do expect
Right.
that those numbers to go up. We expecting because of the amount of dollars are going to go into certain programs. I mean, somehow we got to pay for that, and that is paid by taxation.
Right.
So it makes sense that this is coming, um, and the enforcement is gonna, and that this is the biggest concern. You know what I mean, for a lot of the, especially the small business owners, and we talked about it in one of the previous episodes, is that even though they're saying, well, it is targeted towards the wealthy, but
Right.
again, you gotta read carefully because it is not intended to affect. But again, it is not intended, but there will be casualties of war. You know what I mean? So that means that even though they're throwing also numbers that if your AGI it is 400,000 less, that you don't need to worry because it's not intended to affect you. But again, the key word being it's not intended, and so
Right.
that does not mean that does not mean that you will be excluded. So there's a lot of small business owners concerned that they will be selected, and we expect that to happen. Um, but even prior to the Inflation Reduction Act, we had conversations about areas that we also have seen that the IRS is paying attention to, the digital currency being one. Also, the for S corporations, the basis, because I know that the IRS is concerned that they're looking for different areas where money can be extracted. Auditing is about audit risk, and where can I derive the biggest return, like Michael was saying about the biggest return on our investment. There's a cost to audit. They're gonna target this, where can we get the highest return. And as a matter of kind of unfortunate situation for small businesses is that they tend to have poor accounting, so they're going to have a harder time to prove dollars. So their deductions. So I think that's what we're going to see the highest return, because if I'm auditing, I'm going to target the highest risk. You know what I mean? I'm not going to just target IBM and the Microsoft and all that, because I'm going to go against a system that's probably better set to document than the mid-sized companies that don't have there's a greater probability that I'm going to find more mistakes in there, and probably I'm going to get a higher return. So
Right.
that's why it's important that this mid companies, small business company, be prepared. Like Michael was saying, and I know you have said it many times. in the series of messy books is preparing. You know what I mean? Not
Yes.
waiting. I think it's not about fear. Is preparation. You know what I mean? Now is the time to do tax planning,
Absolutely.
to do your preparation, so you can be face the situation better armed than going blind into the situation.
Right. Absolutely. So now there's something, Michael, when you said, and you know, with this Inflation Reduction Act, one of the key things is that they're trying to raise revenue through taxes. And one of the things that I noted on there was the 1% excise tax on the corporate stock buybacks. This was like, this was like a little crazy thing that is like, for anything less than 1 million. So I was like reading this a little bit over and over, and I was like I was like, okay, how do I understand this? So you're taxing the company that is buying back its own shares?
I mean, it's a good question. I would love to get Pedro's 2 cents on that, because I operate in I'm a CPA for Main Street, not Wall Street, and so my clients aren't dealing with that at all. So in practice,
Okay.
yeah. So in practice, I haven't seen that, but. I mean, like one thing that I have seen recently is on I've got one client that has a crypto fund that he has an interest in a crypto fund, and so I got my team had to deal with this carried interest provision to see whether or not his long-term capital gains had to be reclassified as ordinary income. If he qualified as a fund manager or something to that extent. I've got great tax planners on my team. I've learned about a half decade ago, and instead of trying to learn everything myself, to surround myself
Absolutely, of course,
with pros that know the Internal Revenue Code better than me. I mean, the 1% excise tax it doesn't sound fun, that's for sure.
Right, and that's my point. And without getting too technical, I just found it very kind of odd that you're just buying back your shares, you're really building your capital back inside of your business, and you're getting taxed on it. And then the tax, of course, it says also that the tax is not deductible. Of course, It's not.
I mean, I can only where my head goes. Like this is very high level, like in real time without putting any thought into it. Where my head goes is that there are probably things that companies and shareholders do. Similar to something like a wash sale, or where you can sell it, buy it back with related parties, and this and that, and I can be wrong on this, but it's probably some sort of measure to prevent
something. Okay.
Corporations to do something savvy that is borderline
inappropriate.
I won't say illegal, inappropriate.
Right.
Exactly. So.
Understood. Yeah, that makes sense. What are your thoughts, Pedro?
Well, I haven't really put too much attention to that because my client base are primarily privately held companies. So I personally haven't put too much thought into it. I know that there's this provision about the 15% tax on kind of to supposedly to make it equitable for the larger corporations. I just know that somehow the larger corporation, this is where it's going to affect the most, is these companies that are involved in publicly traded companies, and that's supposedly their target. But I know that they're going to find ways to mitigate that risk. I mean, they probably already are working or have been working on this even before the release of the final. Because again, this was already mentioned in when Biden went into the office. I mean, the what was it called, the Building Better Back or something like that. So it's kind of a slimmed down version of that. So this was already in the air. You know what I mean? So either they're going to manage that through the amount. There could be an impact on dividends that are going to be distributed. They're going to find ways on how to mitigate this.
Right.
But again, my focus has not been into that aspect of the. I have not spent a lot of time into analyzing that part and the impact on the small business companies and mid-sized companies. The privately held companies.
Understood. Yeah, go ahead, Becca.
Well, I was just going to say, I mean, I wanted to I wanted to follow up with what Pedro was saying when we were still on the subject of the 87,000 agents, because there's so much to unpack there, and it's so important, especially because the three of us and your audience, Marie, operates in the small business world.
Small business,
right,
yes.
Right.
And it's frustrating because the government just pushed it through, and they just kind of like it was like a little tiny provision. You know, I mean, the people that noticed it sounded the alarm bells, but they just like quietly pretty much just said, "Oh yeah, like, and we're adding 87,000 agents."
Yeah,
Right.
no, I agree.
I mean, it's huge because I mean, I was taking some notes when Pedro was talking. So first of all, what they're going to do is they're going to try to find low-hanging fruit that they're going to be able to do a computer-generated audit, right? So
Right.
the auditor is not going to come to your office and sit there with your black hat and stuff like that. They're going to send a letter, and in the letter, like, we noticed this, like we noticed that, like please send us the following, and if you don't send it to us in 90 days, then we're going to reassess the performance. And boom. And so that, you know, there's no labor on that, and so another thing is to those tax returns that when you go to the paid prepare section, it says self-prepared. That's low-hanging fruit.
Oh yeah.
Right.
I can't tell you how many times. I mean, and so
Yes.
right, a sole proprietorship that shows these aggressive. Now, I don't want to say aggressive. It's just they don't know what they're doing. They don't know what they're doing. And so, and that's fine. They're not an accountant, but again, audience, like, all the more reason to work with a tax professional when it comes to your taxes, especially if you're a business owner. You know, if your taxes are just a W-2 and some mortgages, you know, if your tax return consists of just 5 or 6 documents that are, you know, getting submitted to the IRS from the issuer of those documents, then you can go to H&R Block, you can go to TurboTax, and because really a computer can do your tax, like the IRS can do your tax return just based on the information that they provide, that they receive from those third parties who issue those forms. But if you have anything that's there that needs, you know, because the burden of the burden of establishing expense, the burden of establishing basis lies on the taxpayer. You know, like that's where I'm sure that you've seen in practice, if a taxpayer forgets to include a stock brokerage activity on their tax return, or if they forget to report, if they get a 1099-S when they sell a piece of real estate and they don't report the IRS will send a notice computing the tax on just the proceeds. They won't even take the basis into consideration. So I've seen situations where the client gets a proposed tax due of like $1 million or like $500,000, something crazy. And then once we respond to it and we show the basis, it goes to zero. But if you don't have a CPA, so again, audience, very important. You want to have especially if you're a business owner, you need to have a good CPA and you need to have a good attorney. Like, you need to have a team of advisors, mainly the CPA and attorney. It's just good practice, and whatever it costs, it costs. Now there are bad ones out there, so you have to be careful, but it will save you in the short term and the long run. Do what you do so you don't have to worry about this type of stuff. And you know, and if you're, as I like to say, you're tripping over nickels to save, you're tripping over dollars to save nickels. That mentality can come back to bite you. And they're not going after the big corporations, people. They're going after the little guys, the little girls out there, the small business owners. They're like, no matter what the big corporations have armies of accountants and tax attorneys. It's not going to be so easy to get in. They're going to delay that thing. They're going to challenge that thing. I mean, like, Trump always says that, you know, like, he's been getting audited like for the last 20 years. I mean, Trump throws everything plus the kitchen sink. I'm not saying anything about pro-Trump or anti-Trump here. I'm just saying the truth is Trump has an army of accountants and tax attorneys that have been battling the IRS for decades. And so, and then Pedro talked about messy books, right? I can't tell you how many small business owners out there don't take their bookkeeping seriously.
Yes.
And they don't take their bookkeeping seriously, despite our best efforts to tell them. And, you know, and so so as a business owner, you have to put more stock into the importance of having good bookkeeping from day one. Either you're going to do it, your spouse is going to do it, someone internally is going to do it, a virtual assistant or your CPA. Just make sure that if you want to do it, then do it, and make sure that you get trained by your CPA to understand
Right.
the best practices. And then if you're not going to do it, then delegate to someone who knows what they're doing, because it's not just about surviving an audit. It's also about getting ready for your exit. And if
Absolutely.
the buyers are going to want to look at the financial statements, and if your books are a mess, then buyers are not going to be interested.
Value down.
The value is going down.
Yep.
The buyers are not going to waste their time. So the importance of bookkeeping for small business owners, so important for a variety of reasons.
Yeah. Absolutely. Absolutely.
Yep.
These are great points, and it's great that you mentioned them, Michael, because Pedro and I have mentioned these things in the past, and it's great that it comes from another CPA that's experiencing and seeing similar things, right? It's not just us saying it. So that's really I'm grateful that you mentioned that. So what are some of the, let's say, I guess, the positives that we can see, if you've noticed anything in the overall, let's say, the act? What are some of the positives, maybe tax credits or benefits that could be for a business owner? I noticed something about the R&D tax credit being, bigger or something like that.
Yeah, there's some other provisions in there that, again, the biggest concern in like Michael was saying is the enforcement. But the positive that's going to be for people, especially if you are into the um, into technology, you can see some benefits in there with the
Mm,
R&D tax credits.
sure.
I think that a lot of the again, going back to the building better back. I mean, a lot of the effort was going towards the green energy,
Right.
and
Right.
that was the big thing. We're gonna take these dollars and assign it into those areas and the expenditure part. And so, if you are into that area or investing into green energy, either be through electric cars or making energy efficient investments in your business, and then there's some positives in there. I mean, I'm sure that meeting with your tax advisors on that, so then see how you can maximize those tax credits that are still available.
Right.
Um, so, but again, one of the areas that I think caught a lot of people by surprise, and I know
Yeah.
people continue kind of hammering over the same issue, is the enforcement part.
Yeah.
But again, some of the other areas that they were not mentioned with, because I think that when they mentioned the enforcement, people got panicked. But what areas could potentially be the highest risk? And I know we have mentioned that in previous episodes, but again, sole proprietors are going to be a high risk, and now more than ever, I think are going to be even a higher risk. S corps are going to gain a more attention. Reasonable compensation is going to be a topic of discussion. You're going to see a closer look at a basis now. For example, starting this 2021 reporting, now they want you to fill out a 7203, which now you have to disclose the roll forward or your basis, which in the past that was not required. So again, you can see where their efforts are going to go. And like Michael was saying, the audits is not going to be somebody knocking on your door. A lot of them, and this is why the small and mid-sized company also could be an easy target, because they can do this electronically. They can nowadays, they have a lot of information computerized, so they can easily send you a letter to, you know we found this error, and they want you to provide evidence of that. So people need to be aware of that. And the other area of tax credit, now you mentioned tax credits, the other area that the IRS is going to be paying attention to is going to be the PPP, the
Mm,
ERTC, because they know that there is opportunities in there to catch some people that did it inappropriately. You know what I mean? Some of them innocently, meaning that they didn't know, didn't understand, but some people that probably pushed the envelope and took PPP and ERTC incorrectly. So those are areas, if you have those type of credits, um, if you're an S corp, I would highly recommend that you have your tax advisor look over, especially the area basis. If you're a sole proprietor, I would, they have been targeted in the past at high percentage wise, being highly audited. So if you still want to continue being a sole proprietor, again, I would highly recommend that you have a tax advisor look over it. On the positive side, I think in addition to some of the tax credits that we discussed, I think that there's some areas of opportunities in there to look into. Like I said, the R&D. I would encourage some of the company, some industry that you don't think about that qualify, even including and not limited to construction, for example. Some companies do qualify if you can demonstrate that you have some a methodology that you have developed, and then you can qualify for research and development tax credits. I see some awareness. Another positive thing I see is now there's an awareness and importance of, and I hope it will stick around, the importance of good books, good accounting, tax, and so on. So that's another positive thing that we have seen. I've been getting some calls now for people that want to be proactive. I don't want to wait. So that's a good thing.
So I feel like to the audience, it's not my intention to be a negative Nancy here, but overall, this Inflation Reduction Act is concerning to me. It's concerning to me. The R&D tax credit is traditionally one of the most audited tax credits. So if it's a catch-22. If they're increasing the tax credit, well, just make sure that you're working with the tax professional. There are vendors out there that specialize in credits, and so and they provide attorney letters that substantiate their position. And so just make sure that if you're going to do the R&D tax credit, that your I's are dotted and T's are crossed, because you want to survive an audit. So it's like they're increasing the R&D tax credit. But at the same time, the R&D tax credit is a commonly
audited. I agree.
It all is a great dovetail into the importance of redefining. And Marie, you and I talked about this on my podcast a couple months ago.
Yes.
The importance of redefining the relationship between client and CPA.
Mm-hmm.
Right?
Yes.
Because the accounting and tax industry out there is heavily commoditized. And so, thank you H&R Block for that, by the way. Intuit is, they're in all different levels, right? Like Intuit TurboTax, right? I mean, commoditization. But then they also have Lacert, which is a very robust tax software, super expensive for tax professionals. And they've got QuickBooks and everything. So, but anyways. What happens as a result of this is that the market, right, the consumer, the client, doesn't respect the value of what a CPA really brings to the table. And that's why I like to refer to myself more as a family business manager at the end of the day. Like when I work with my clients in a professional service agreement context, I'm their family business manager, and taxes are a part of that, of course. That tax conversation inevitably goes into other areas of financial professional service, and I've got people on the team. Whether if the client has other advisors, then they have to be part of that arrangement, and if not, I've got people on the team, and that arrangement is a professional service agreement. So the way that I work with my clients over at Swartz and Reeder Advisors, or SRA, as I like to refer to us, is we work in professional service agreements. And so we have a subscription-based model. And what that subscription-based model does is that it creates a framework, it creates a structure in which client and family business manager, or CPA, because CPA is just, it doesn't do justice to what we really provide.
Are doing as advisors, yes.
Yeah, so, what it does is it creates a structure, a process in which we are in dialogue throughout the year, right? So we have a transactional ad hoc structure, and we have a subscription-based model. And we're advocating the subscription-based model because we're going to be meeting once a quarter. And the client also has 4 hours of additional consultation time throughout the year for them to use it however they want. And so I have a lot of clients that they take their quarterly consultation, right? So once every 3 months, they have 60-minute, and then they take their 4 hours of additional, and they break it up into 30-minute sessions for the other 8 months. And so what's baked into that monthly fee is the cost of preparing tax returns each year. of course, but then it's in the consulting and the strategic tax planning, and it's during the dialogue throughout the year that we're talking about stuff. We're talking about stuff like the Inflation Reduction Act and the 87,000 new agents coming, for example. Like that's a hot topic.
Right.
And so my clients that see the value in the subscription-based professional service agreement, like that is my manifestation of how to optimize the relationship between client and CPA, because so many people out there, because the market, right, the consumer, the client in this space that are looking for a tax return vending machine. They want to go to the tax return vending machine, put in $1, and the vending machine spits out a piece of paper with some numbers on it, and then they don't even know what they're looking at. They don't even know what they're looking at. And then when they get audited in 2 years from now to ask about this, ask about that, they're going to get mad at the tax return vending machine. Well, I mean, you got to look in the mirror, client, because you got to take this stuff more seriously. So I think that this Inflation Reduction Act is a big wake-up call to people. I mean, and it's easy to get comfortable, right? Like audits have been in an all-time low really for the last half decade, and so it's about to change. And it's frustrating because I'm an entrepreneurial CPA. I'm a big advocate of business ownership. Small business owners are the backbone of this country, and I understand that there are probably some small business owners out there that are doing things wrong, and shame on them and stuff like that. But the majority aren't, and I just feel like this Inflation Reduction Act is punishing small business owners, which is not going to go well for the overall economy when it's all said and done. That's my opinion.
Right. No, I definitely agree with you, and the relation with you and I have talked about it, and Pedro and I have talked about it too. We're in the same mindset as you, that the whole relationship, the dynamic between the client and the CPA, or their understanding of who a CPA is really needs to be redefined and renegotiated. Let's put it that way, because we have it's gotten to a point where that DIY mindset has just taken a hold of everybody's mind, and everybody thinks, like you said, the vending machine was a very good example of. I just put this $1 in and that's it, and every vending machine I go through, it's going to be the same $1, So, but it's not that, each one of us, we have our own experience sets, and we have a group of team that we work with to bring a big value to the business owner. Unfortunately, that's not what they've been shown, or the value that we bring into the table. So, and that's a very, very good point. And here's why all three of us are together talking about these different things, not only the act itself, but then as CPAs, how do we see our industry and our relationship with our clients moving forward. So this is why I wanted to do this roundtable discussion.
Yes, absolutely. And I mean, and thank you, Marie, for those encouraging words. And, I want to help. I want to help small business owners out there, and I see what's coming, and a lot of them are going to get clobbered by this thing. I want to help them, if for you clients out there that don't see the value, and it's not all of you, but I know some of you are listening, and this, right? Like if you're listening, like deep down in your soul, and this applies to you, right? I say this with love and integrity. If you don't see the value you're in working with a proactive CPA like any of the three of us here, then you're putting yourself at risk for a bigger cost, and cost comes in more than the form of money, right? Cost is there's a monetary aspect to the word cost. There's also cost in the context of frustrations and anxiety, and there's also a cost in the context of time. And if you're getting audited, that's going to disrupt your day-to-day. So it's going to be a time suck. Yep. It's going to be frustrating, and you're going to be anxious as a result of it, struggling with sleep. You have this auditor, breathing down your neck. And then when it's all said and done, you're going to owe an extra $15,000, $20,000, if not more. And that's going to be a cost on your pocketbook. So, what we can't help you if you can't help yourself, client out there who doesn't see the value. And we want to help you. But we don't work for free. And so what are those what are those cost drivers, right? Like what are those costs that you can cut, right, on the income statement, and what are those costs that are worth spending money on because it's think of it like insurance, both in the short term and long term, right? A good CPA and a good attorney.
Absolutely. That's a very good example, Michael. Thank you.
Mm-hmm.
Thank you so much. Any last thoughts from Michael or Pedro before we wrap up our today's show?
No, just to share and like. And,
like, subscribe, pick up. I'm gonna run both of your banners one more time, and I'll read it out loud for those who are gonna hear this on audio. So we have Michael. You can email Michael right here, Michael Reeder, REEDER at schwartzreeder.com. Phone number 847-241-5800. Of course, you can check out their website, www.schwartzreeder.com.
And I'll just say real quick, Marie, because we have an answering service a lot of the time on our main phone, just because my team is so busy. So if you're listening out here, if you want to play it back right here, my phone, you can call me on my cell phone. It's 847-302-3397. And you can call me and text me at that number.
Awesome. And then let me just read out Pedro's information as well. Coming up right now. So you can email Pedro at pedrocpa.com. Phone number 954-616-8991. Of course, website www.pedrocpa.com. Any thoughts from you, Pedro? Anything else?
No, not at the moment. This was good. It was good. I mean, to get a different perspective.
Yeah, definitely. So, okay, guys. So this was very, very awesome, and thank you so much for both of you for joining me. Really good friends, good colleagues that collaborate with both of you so much. I really appreciate your time and your commitment and just joining me here and helping me as part of changing the industry and then transforming the CPA world, So I'm very grateful to both of you for being in my network and part of my 5 people, the group of network people that I have. So of course, as I mentioned, this is our, episode 55 and Pedro has been continuously my guest. And then we've been talking about these for 55 weeks now. And so this will be kind of like the last show of the season, let's put it that way, until the next season takes off, hopefully next year. In the meantime, I'm going to be focusing on the Profit Lab show and podcast, which I've been doing at the same time on Tuesdays at 10 o'clock Eastern time. So same thing, guys, Facebook, LinkedIn and YouTube always. So I really, really encourage you, to subscribe to my YouTube channel so that you can always see all the other episodes coming up from the Profit Lab podcast. So, and show. I will be posting other videos as well. I'm also going to be a little bit more active on Instagram and TikTok. So if you want to find me there at Marie Torossian CPA. So with that, gentlemen, thank you again. And I usually leave my audience with a motivational quote by Jim Rohn. You are the average of the 5 people you spend the most time with. I hope that the 3 of us were today. We're 3 of the 5 people you're surrounding yourself with to learn and grow your business. So until the next season, have a wonderful, blessed rest of your year. Enjoy the holidays, and I'll see you on the Profit Lab show.
Okay, take care.